Hi, let's take a closer look at the AST SpaceMobile. It's a company that operates as a space-based cellular broadband network for mobile phones. The market cap is quite a big, 1.5 billion. Snowflake analyze shows future growth 5 out of the 6, health, financial health 5 out of the 6 also. It's trading almost 100% below the site's estimated fair valuation, so it has pretty big upside. Earnings are forecasted to grow hugely, 75% per year. Revenue grew already 167% over the past year. On the risk side, it has 1 year of cash runway and also the high volatile share price, because we saw and we see once again it's reached the double bottom. Actually, it's triple triple bottom, but anyway, uh, I think there's a big support level in level of the $7 per share, and so there's high possibilities that it could bounce from the $7 to even we saw in highest points mid-February. Highest point when that day $25 per share. So from 7 to 25, there's the volatility. Anyway, latest share price and events. There was earning updates, special calls. They entered the index, and also did they change the auditor of their company? Announced auditor change. Yeah, that was on 9th of July. Anyway, the market performance shows that it's actually not showing, but that was 2 years ago, but did they announce some of the M&A, because it's not showing the 1 year return. There's 90 days, which is currently 11%. It outbids the industry and also the market. Long-term price volatility considered as lowest because there is no 5-year volatility relative to market. And industry itself is less volatile than the average market volatility. So industry that they're working in is US telecom. Let's check the valuation. So fair valuation based on simple Wall Street should be around $500, huge upside. And if we take a look more accurate, tip ranks has $32 per share, that is meaning 280%. And yeah, in good scenarios, 12-month forecast, $35 per share. So many of the stocks are decreasing. I see this trend. If the economics and also if they stop printing the shares, the money from the federal system, then there is a possibility that this stock are not going to decrease, but those who are more overvaluated, they are going to decrease. Anyway, the Market Watch has similar price targets as a tip ranks. In good scenarios, $35 per share, average 32. And yeah, pretty much there's huge upside, I would say that. And future growth for the company is forecasted 75%, as I said before. And also earnings per share, we see that it's forecasted to grow, but it's not forecasted that they could become profitable within 2 years. Past performance, last year's earning growth decreased by over 100%. So they had back in 2018 earnings minus 4 million and currently minus 42 million. So there's a lot of operating cash flow eating the money, and currently the company is unprofitable. Financial health side, I think they have no debt. Company is debt free, and they also have a lot of cash. 400 million. And is that because they printed shares out? Yes, of course. So they put a lot of their shares out. And yeah. Anyway, the company is debt free and balance sheet looks green. They are not paying dividends. On the insider transactions, no volumes, and also ownership breakdown, we see general public holding 47%, institutions 36%, private companies 11%, public companies less than 5%. Top shareholders, we see no change. Not sure, is this because of it's not refresh, I guess. But anyway, let's move on. Sales growth, huge, increasing every year, 300% per year. That is pretty huge. And I think if they would not print the shares out, the price would probably be 10 times more, because they had last year they have had 5.5 million shares out, and currently 10 times more. So there's a very high possibility that the shares, if they wouldn't bring the shares out, the price would be around $80. I guess that. But basically, if they have some of the expansions reasons that they need money to for the business, then of course, if it's needed, they just print out. Anyway, simple. Investing.com, summarizing the stock for long-term investors as a sell. And let's take a look at the comments. Great result and new contracts expected. Yeah, so I guess there's a, let's look at this one. Let's read this one. The technology, so the idea is that SpaceMobile will be the first space-based mobile network to connect directly to 4G and 5G smartphones without any need for specialized hardware. Traditional satellite system requires expensive specialized satellite phones or ground antenna system, which is different to AST SpaceMobile's patented technology, where all that is needed in the phone in your pocket. But how? Well, the company has decided to not disclose it is, as you can read on the website. With over 750 patent claims, the technology is highly appropriately, and exactly how it works cannot be disclosed. We can say that our engineers have designed an entirely new form factor and deployment method that significantly reduce the time and the cost associated with manufacturing, launching, and operating satellites. AST designed and patented a modular LEO satellite system, low Earth orbit, that will be significantly less costly to build and launch that legacy satellite system because of its unique and proprietary nature. The company cannot disclose more specifics at the time, so we need the general public do not have access to their patented technology, but the early investors do. And in the light of that, they have to decide to invest initial 128 million. In our positions, we cannot affirm the tech will work or not work. But AST Blue Walker won satellite back in April 2019 to test SpaceMobile tech has apparently demonstrated enough success, or at least promises to attract sizable investments. So there's actually the whole answer. So actually, from on my perspective, there's a huge potential that these kind of companies will take the lead on the 4G, 5G, it doesn't matter, for the internet. Currently it's pretty expensive. If they could reduce the cost of internet, there's a huge growth, because this company worth 1.5 billion. But the companies currently that have the system that is mentioned here, the antenna system, which is different, that the company patented, they have 400 billion. What's the cost? The AT&T. So if we open up another telecom, so how big? It's different company, but anyway, yeah, 200 billion. So there's a huge growth for new companies, but unless bigger one acquires them. So most probably would happen this scenario, so they're not taken. I guess they're not willing that other companies could profit that much, that they grow so fast that they would be number one. So most likely the bigger ones buying small ones. Anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.